So I'm going to guess that things have gotten a little less clear since the last time you graced us with your visit here on this set. You got the midterms too,
yes,
but you got this sort of weird, the trade war sort of ramped up, and the markets don't seem to be reacting to earnings as much.
Well, I do think we're moving sort of into a period of some unknown. So we have tariffs, we have rates rising, we now have the elections. I think we're right at the point where we're going to get some clarity on some things. So today's election day, obviously you're talking a lot about that. We'll have something from that perspective, so we'll have less uncertainty there. Hopefully tariffs seem to be a political hot button, and so if we get past the elections, we may be able to have some, real sort of resolutions there at some point. But again, with rates rising, with earnings slowing a little, the market's getting a little more tenuous.
I'm not going to ask you to make a personal political preference, but as an equity portfolio manager, do you care about the outcome of today?
Well, let's
not as an American, not as a human being, but as a equity portfolio manager.
I understand. So let me answer that in a couple of ways. So number one, as an earlier guest suggested, since 1946, every year past a midterm election, the market's gone up. And so in 18 prior periods, we've had a positive market. That's a good thing, obviously. Tends to do better if Republicans are in than Democrats are in. Both times it's positive. So in some ways, we just got to get past it is a good thing. And then again, the expectations around where we are. So as you said, lots of times today, Democratic House, Republican Senate is sort of status quo. That's sort of the expectations in the market. I think at that point, we'll just move forward.
Yeah, I mean, the historical stat is that going back, 50 years, according to Stock Traders Almanac, the 2 months after a midterm, or the quarter after the midterm, and the first 2 quarters of the next year after the midterm, did you follow that? The next 3 months historically tend to be very good.
Right.
But do you care about history, the stats like that, or is it just kind of like a frosting, kind of a nice thing to think about?
Well, it's good to have that on your side, right? It can't hurt to have
it's
a tailwind.
better than the other one.
Exactly.
Guess,
and,
right?
Generally, once we get past the midterm election, you have a president now who starts thinking about his own election, and he starts talking about potential stimulus, right? So that's another reason why the market likes that, because if we can infrastructure bill, as you mentioned earlier, or something else that might happen, it's something positive to look forward to in terms of economic growth.
I mean, would you go as far, Mark, as buying a set of stocks like an infrastructure stock because you think the Democrats may take the House and therefore we're more likely to get an infrastructure bill? Would you go that far?
We would not go that far. Having said that, it's good to have more things on your side than not. So yes, if that was something that could help a particular name and we thought it was high probability, that would lean us in that direction potentially. But it's not the only reason we buy something.
How much has the midterm sort of been not weighing on, because that has a negative connotation, but out there affecting equity trading?
Well, I think you saw what happened in October, right? I mean, the markets were down a lot, and some of it's around uncertainty, and clearly part of the elections add to that uncertainty. So, yeah, it's mattered.